2013 meeting of the Finance Committee of the Santa Barbara City Council will now come to order. Seeing no members of the public, I will simultaneously open and close public comment and go to our first agenda item. Ms. Tara.
Good afternoon, Chair Francisco and Committee Member Murillo. I'm Jill Tara, Treasury Manager, and I'm here today with the December 31st Quarterly Investment Report. Also included in the report on Attachment 2 is the Fiscal Agent Report showing the balances held at the bond trustees, the unspent bond funds, as well as the police and fire pension funds that are held by third parties. We won't go through that today. We'll look at our city's portfolio, some economic highlights, and then turn to the activity and yield on the portfolio. Starting up on the overhead, you can see the economic highlights section. The financial markets for calendar year 2012 posted gains for the year. However, there were some modest declines in the fourth quarter due to uncertainty over the outcome of the presidential elections in November, and then additional declines in equity markets due to uncertainty over the impact of the impending federal fiscal cliff. Now, the fiscal cliff was set to trigger in January and was a combination of tax increases and spending cuts that were going to take effect. It was anticipated that if both those things happened at once, would create a double whammy on the economy, triggering mass layoffs and an increase in unemployment, and cause the national economy to possibly fall back into recession. At the end of December, CPI growth was 1.7% for the 12 months ended at the end of December. Overall, CPI in the individual sectors was a little bit higher than that, but was offset by declines in the gas sector. So we are continuing to see some relief in gas prices, and that has lowered the CPI below the 2% Federal Reserve Bank target. Unemployment also remained flat over the quarter at 7.8%. We, as expected, we continued to see Treasury yields remaining at exceptionally low levels, and now the Fed forecast anticipates those low yields continuing possibly into 2015. So rather than shortening the forecast and expecting a quick recovery, it's just being prolonged out. So we'll continue to see slow growth and a very slow turnaround in yields. The portfolio activity, you can see that we had $14 million in agency securities that were called or matured. Of that, $10 million were callable securities because they were at higher than market yields. They were called. We replaced those with $10 million in callable agent securities. We had $4 million in bullets matured. And rather than replace those with bullets or leave the balance in LAIF, we bought some Treasury notes. For a long time in the portfolio, we haven't bought any Treasury notes because the Treasury yields were lower than the LAIF rate. So we were just holding it in LAIF and waiting for those to turn around. LAIF rate has dropped low enough, and the Treasury yields have risen ever so slightly to make it so that it made sense to diversify at this point. Also, at the end of December, we had a $91,000 principal payment on the long-term airport note that Council approved, and the LAIF balance was $30.7 million. That's a little bit lower than typically we see at the end of December because we do receive a big property tax payment, which boosts up our LAIF balance until we can get it invested in during the next quarter, and we'll look at that at the end. Down at the bottom of the overhead, you can see that our portfolio interest earned during the quarter was just over $555,000, and that is the interest on the entire portfolio and allocated to all the city funds. So that's not just the general fund portion, it's allocated out. And our portfolio yield was down ever so slightly by 18 basis points to 1.434. Now, at the midpoint in the fiscal year, I bring to you a portfolio income comparison just so we can see, what the total income that has been earned year to date. We usually look at this in December and then again in June. You can see at the height of the recession, our interest income after 2 quarters of the fiscal year in fiscal year 2010, which is 12/31/2009, midpoint of that fiscal year, was $2.3 million. You can see 3 years later, for the same period this fiscal year, it's gone down by about half to $1.1 million. And that's really a reflection of the fact that the securities held in the top couple of fiscal years were bought pre-recession, so it yields at 3, 4, 5%. And as those mature or get called out of the portfolio, of course, we can buy back in at a much lower rate, and you're seeing that there. Again, these amounts are allocated over the total city funds, not just the general fund. And it's interesting to look at the yield on the far right from 2.7%, which was really low compared to historical rates of 3 to 4, 4.5% on our total portfolio, and now it's declined to 1.4%. You can see that also the total portfolio balance has remained pretty constant during the same period. So it's not like we've spent down a lot of cash and reserves that are accumulated in the funds. This is a typical overhead where we look each quarter at how our city portfolio is comparing, I hate to say benchmarks, but to some other alternative investment vehicles. And you can see that the city portfolio back in December of 2009 earning that 2.7%, which has declined down to 1.4 now, although the declines over the last couple of years have been much smaller as a total decline than in the early years when yields were when yields in the marketplace were dropping quite quickly. Also, it's interesting if you look between last December, December of 2011 and December of 2012, the LAIF rate, the 2-year Treasury note, and the 90-day T-bill, which is a LAIF alternative, have all remained pretty constant and far under the yield of the city's portfolio. So while our interest income is a fraction of what it was when market yields were very high, we've certainly performed much better and managed to weather that just through, I would say, strategic purchases of callable maturities and balancing that with our LAIF return. We'll finish with a snapshot of the portfolio at the end of the quarter. You can see that the amount held up at LAIF, which is the State of California's local agency investment fund. It's our pooled money market fund, and we use that to hold the liquid part of our portfolio. We can call up by 10 a.m. any day and send money up there or pull it down as our cash needs are. The balance at the end of December was $30.7 million, and that's a little bit lower than usual. If you drop down to the bottom, the second to last line, you can see the SBB&T money market account. That's our operating bank account held at Union Bank / Santa Barbara Bank and Trust, was $13.5 million, or just under $13.6 million at the end of the quarter. That's about $10 million higher than we would typically see at the end of any month. We got our property tax payment at the end of December, and we also pulled down a portion of LAIF to cover any investing activity and any unanticipated bank account activity that might have happened during the holiday closure. So we wanted to make sure that our bank account didn't go negative because the rest of the world didn't close between December or between Christmas and New Year's as the city did. So once we came back into the office on January 2nd, we made a big transfer back up to LAIF. Other balances at the end of the quarter, we hold $8 million in certificates of deposit, the new Treasury securities that we bought in, the two Treasury notes for $4 million total, our federal agency issues, a combination of callable and bullet maturities at $90.6 million, and $10 million in corporate notes. Our total cash and investments at the end of the quarter, $162.7 million. That concludes my report. I'm happy to answer any questions.
Questions from committee members?
No.
Just out of curiosity, what would you say approximately is the value of the LAIF account today?
I think it's $41 million this morning.
Okay. All right. Thank you very much. Anything else? Meeting adjourned.